Morning, this is Tom Alexander. It is Sunday, May 15th. It's about 11:22 a.m. Eastern time in beautiful Charleston, South Carolina. Okay, there's a lot to discuss here. To me, this is a lot of fun. This is when trading for me gets really, really fun. And what I mean by that is that we are, the narrative right now is that we're starting to, the trading world is starting to freak out because we're off the highs by a little bit. People are calling for bear markets, gloom and doom, and I don't really know. And then you do have a certain crowd that is expecting the market to bottom and we're going to race to new all-time highs. Neither of those narratives is particularly helpful if you are a trader. The only thing that I have learned over 37 plus years of trading, the only thing that I can depend on is what I understand and something that is objective and consistent. And what I have always used, or what I have learned, I haven't always used it, had to learn the hard way like most traders do, is to follow price action. And follow price action through the lens of auction market principles, because auction market principles drive the market. Auction market principles explain market behavior. They help define market condition. So as a trader, when I can understand market condition and market structure sets up, then I have a trade idea. And I don't trade narratives. I don't trade, we're in this horrific, the beginning of this horrific bear market, or we're at the end of this correction and we're about to rip higher to 6,000 plus on the SPX. I don't know. But what I can know, and let me start to show my screens and we'll talk about some charts here. I can look on my charts and I can say, okay, this is what is. This is reality. What we're looking at here. This is the weekly view of the four primary U.S. trading indices: the S&P, the Russell, the Dow, and the NDX. It's very clear the levels to the upside that have to be taken out to restore a bullish bias, and that's basically last week's cash session lows. I have those highlighted in the report that you all have. If you're listening to this, you're not getting the report, send me an email, tom@alexandertrading.com, and I'll put you on the list. You'll get the report. But the levels from last week to the upside, we have to take these out to restore any bullish tenor to the market. Now, to the downside, there's really nothing from a structural perspective, from an auction market structural perspective, below last week's lows. There's no quote unquote support. Now, that doesn't mean if we trade below last week's lows, we go to zero. It just means that there is no objective level that you can point to and say, oh, okay, market's likely to slow down in here. And the reason for that is because the move off the March 2020 low was so extraordinarily vertical. There were very few pockets of relative balance where the market spent a lot of time and developed a lot of volume. That's why this 4,300 level was so important, because it took out this heavy high volume node that was created back in 2021 in September, October of 2021. And we had trouble getting through that level, as you can see. And I talked about this for weeks and weeks and weeks. You can go back and look at the previous reports for those discussions. And we finally broke below it. Well, these are what you're looking at here, the weekly charts. Now, it's possible, because of last week's reversal at the end of the week, Thursday and Friday, that we're putting in buying tails on the weekly charts. We can't know that until the close of next Friday, and we'll see. But if we close here or higher next week, then there are buying tails, and that's a bullish signal, price action signal from the market itself. but that remains to be seen. So far, we'll get into this in a minute. So far, every time we've had these 1-2 day wonder rallies, the sellers have come in and just crushed the market again and driven it to new lows. So your weekly key reference areas are in the report. Let's take a look at the daily situation. All right, here are the daily charts. Now, the daily charts also, I have the daily key reference areas highlighted in the chart. One thing I'll point out is that the Russell, this is not the chart I wanted to show. I want to show, that's weekly. I want to show the cash chart for consistency. Thought I had this all queued up, obviously not. Okay, here are the daily charts. Now, I discussed the idea of divergences in a special report that I sent, and I also mentioned in that report that all it would be a day or two of selling, and it would erase those divergences, and that's what happened. As I mess around with this, my computer updated last night and erased everything that I had prepared for this, so apologies. Okay, so the Russell, this is the Russell cash. You can see we closed above the Wednesday, well, we didn't close above, we traded above it, closed right at the Wednesday, Thursday high. We did not quite get there in the Dow. We're pretty close in the S&P. This area in here, and again, I have it highlighted in the report. So what I want to see, what we want to see, is we want to see if the market can get above these levels from last week and can continue to generate some sort of upside momentum. Otherwise, this is just a bear market, furious rally off of a severely compressed low, and that's a typical bear market signature. And that's another thing. I don't really care if we're in a bear market or a bull market. I mean, the rallies in bear markets are ferocious and they can be awesome to catch. And I don't call market bottoms. I don't call market tops. I point out key reference areas. If you're interested in fine tuning, then join the live trade room. We cover this in real time every single day, pointing out trade setups, possibilities, and going through this in real time and fine tuning things. But okay, let's take a look at the profile perspective for a minute, which I think is interesting. And for once, it deserves more discussion than I typically give it. This is the long-term view of the S&P. Now, when I say long-term, each profile unit is 1 year. So this is 2021, and this is 2022 to date. Now, if you look at this, you can see we're trading in one auction. So far, last year and this year's trade is one auction. And if we combine this, you can see we're trading below the high volume node of the 1.5-year auction. Now I'm going to unmerge this. And you can also see, and I'm show this, I'm going to go down in time frame. There's a subtle migration of value lower. But this is the 2021 low here. This will be an area that people will be paying attention to should we get into this area for sure. Now let's go down in time frame and go, let's go to a weekly. Now what we have, and you can see the migration of value lower step by step. This is that level high that I highlighted on the yearly chart. This 3780, 3670-ish area. But you can see here's the high volume node, lower high volume node. Now this is quarterly. Each individual letter is 1 month's trade. So this is 1 week's trade. My apologies, 1 week's trade. So there are 12 rotations slots in this. And you can see we had this torrid, incredible migration value higher that was relentless off the March 2020 low. And then what we've seen since then, we're seeing this migration of value lower. This is where we're trading right now. This is where we are as of the close right here. So there is work to do to restore a bullish case. Let's split this out. And you can see we've been relentlessly down. This is what has a lot of the trading world in a dither that, we haven't seen this in 2 years. We're having the most protracted time-wise correction, and actually price-wise as well. But so far, it's really been pretty benign in the bigger picture so far. All right, looking at the daily profiles. Now you can see pretty clearly here, this was all one auction. And I talked about this in previous reports. This was all one auction. This is the May auction to date through Friday's trade. And we'll split this out. And here's what we have. And this coincides with the information on the daily charts about the level that needs to be exceeded to the upside to restore a bullish case. And here's that potential buying tail that exists on not only on the weekly charts, but the daily charts as well. So the May auction is anything but complete. And there are so many at this point ways this can develop from here. Okay, so that's the profile view. Now, another piece that we watch, and I am anti-indicator for a million reasons that I have outlined in books, courses, and constantly in these videos and in the live trade room. So what you're seeing here really aren't, well, I guess they are indicators to be fair, but what it is, it's market information. It's indicators that's derived from the market itself, and specifically NYSE data, actual trade data. And what I use advancing issues. I use the advanced decline line. The blue line is breadth, the histogram. And then I keep a 10-day moving average of just NYSE advancing issues and a 5-day moving average of advancing issues. And it's a sentiment indicator. It's a rough, gross instrument. It can be helpful at times, especially helpful at identifying short-term lows. It's much more helpful in identifying lows than it is identifying tops. I've done numerous webinars on this subject. I've talked about it before, and it's much more helpful. This information is much more helpful at lows than it is highs. Currently, we have a potential very bullish divergence setting up between the 10-day moving average of NYSE advancing issues and price. We made a low here back in January, and this was an extreme reading in the 10-day moving average of advancing issues. This level had not been seen since March of 2020. And since then, we've had rallies and then further decline. And we've had another leg down here. And it's accompanied at this moment, it has been accompanied by a 10-day moving average has been trending lower, but so far, and this is a correlation, it's not a causation, but so far, there's a large divergence here. So next week is going to be important. I think next week is likely to clear the air in terms of, have we put in an important bottom, or are we still going to work lower? Another thing I'll point out about this price breadth relationship, and price and breadth have a very different personality in a bull trend or a bear trend. This is definitively, it is the poster child for a bear trend personality. How can you tell? Well, the green arrows represent days on which we close negative 2,000 breadth or lower. And we have had a remarkable cluster, especially since this high back at the end of March, of negative 2,000 breadth readings. But we've had a remarkable numbers really since the high in the early part of the year. I mean, we've had 1, 2, 3, 4, 5, 6 negative breadth readings since the high made on March 29th. That's the only time I can find that we've had this many negative breadth readings is back in March of 2020. This is somewhat of a March 2020 type of decline, except we haven't had quite the volatility or the range expansion that we saw in March of 2020. Now, we may get there, but we haven't so far. The other thing that I'll point out, or another thing I will point out, is that the decline off of this low, and it's been very persistent, and it's traveled, well, we'll just see. This is not going to be exact, but it's going to be pretty damn close. Okay, so we're down about 17%, and everybody's freaking out over this. The total decline from the high is about 20%. Okay, but this has been, you know, pretty relentless. However, if you notice, it's been rather two-sided. And what I mean by that is there has been pushback all the way down. Even the furious rally on Thursday, Friday, you know, there are buyers that are stepping in and that are fighting this. And typically what happens, and you guys that have been following me for a long time know what I'm going to say next. Typically what follows this type of pattern, this type of two-sided directional trade, is an extremely sharp move that clears the air. So based on this, I think that we're close to some sort of absolutely ripping upside trade, or we're going to completely collapse another, I don't know, 5 to 10% below this low and clear the air that way. But you know, this two-sided grind business that we've been in since this March 29th low, I think is on the clock, and the air, I think, is about to be cleared, and we're going to get that proverbial sharp move. So guys, as usual, next week should be a fun week. I hope you found value. If you found value in this, please like it, please subscribe, and if you want to be notified, hit the notification bell. You guys have a super week.